Hey everyone, hope you're well today. Let me know what's been happening with you. Hope everyone's good. Quite a strange session today in treasuries. Um, Let me know if you're trading at all, what you were seeing. We essentially went bid pretty much the whole session, to be honest with you. But it was, it looks easy when you look at it on the profile. But if you have a look at if you want to replay it, every single contract from the open essentially had like 20,000 contracts traded. So, out with us hitting we broke the highs here. So I was anticipating that this was going to go, but then I wasn't expecting it just to be such a grind. You had to hold on to this trade for probably hours for it to work. Alex, how's it going? Your first one here, dude. Nice of you to join us. Um, So yeah, we kind of paid too much in commissions today, to be honest with you. I think we finished the day with like 4 or 5 ticks today. Not bad, but as I said, really for these trades to be, pretty easy flows. We kind of went a little bit bid overnight session. We then opened here in A period. We went bid, and then when we cracked this level, so when we cracked here, which is essentially Monday's high, I was expecting some stops to be taken, but the offer was just so thick. You can see here there's 844 at each price. Like that's entirely true. There was tons of contracts having to be traded. I mean, so it was not the easiest hold. Hey, Nicky boy, what's happening, dude? Um, so yeah, essentially how the day went was up a few ticks, took a few ticks, tick down, scratch. Loads of scratches in here. Because when you're up 2 and 3 ticks in treasuries, that should just never come back for a losing trade. They just shouldn't. So a really nice flow. When we saw this on Monday, if we look at yesterday, when we basically broke the first 30-minute low and we swept down here, the difference in the flows for Monday was this basically just capitulated. There was some stops and it happened really quickly. And then I was long. This was the value area high at the time. And then when we popped here, it was just straight bid. There was none of this thousands and thousands of contracts traded at each price. So yeah, that was the flows for today, which is kind of, I suppose, I mean, I'm saying this is kind of expected, right? When you don't have any real data coming out and all eyes are on the FOMC minutes tomorrow and Thursday unemployment numbers as usual. Yeah, exactly. This was a kind of meh day. And this is the thing about how you get variance in trading. I was actually anticipating this break, right? But in trading, you know, you need some real size to come in, and the last thing you want is this high to break in the first hour, and then it take let me go back if we can actually see this back to 1 o'clock to see what I mean here, or on the open. Okay, so you can kind of see this. Let me full screen this so you can see what I'm meaning. So we're also going into the sell imbalance that you can see is actually drawn along the charts here. So when you're coming up, you were seeing 7,000 contracts lift the offer, then you have 5,000 contracts hit into the bid. Just a real aggressive amount of ticking back continuously. So not the easiest flows. You kind of want it when you kind of don't want the other side to be fighting back, to be honest with you. And we took a couple more cracks. the fact that the delta for today is pretty one-sided. So we took two ticks here on the trying to crack this level. So we were short from here, and then we were hoping that we broke 16 and a half. This is in the last hour. We can see we got down here, and I was thinking, right, we were plus like 26k delta. I was hoping some of that would be unwinding. Yeah, really, really difficult one to crack through there. Just not easy flows. And this is the thing. Um, Granted, the book was pretty thick, and you can see that by the MBO data. It's not normally as thick as that. But typically, to make those trades painless, you need some stops to be triggered. That's almost like an absolute smackdown happens. Quick and painless is what you want. I don't know about you guys, when you're scalping on the DOM and you're really paying attention to like every single move that happens here. And also, if I remember correctly, when this was lifting, there was a time that basically all markets were sort of bidding as well. The twos was lagging. Twos has actually been lagging in the last couple of days. Um, but the variance in trading is, some days you'll take that trade, right? It'll crack the high and it will just go. Probably doesn't help that we're getting close to roll as well. There's so much open interest on treasuries at the minute. Didn't trade yesterday, matey. James, nothing worse when that happens. I mean, kind of a similar day. I took a number of scratches today, which begs the commission. Well, it is commissions, but begs the question of, it just really shows you how important commissions are in trading, to be honest. Yeah, inside week. Well, we're waiting on all the. This is very typical when you've got Monday, Tuesday data before FOMC, and then you've got the data coming out on Thursday as well. Is ES all you trade, James? Do you not dip your toes into treasuries as well, or we'll jump into indices in a little bit because obviously this will be like watching paint dry. This is pretty much all she wrote. I think it was roughly I and J period here. We spent a whole hour, and I'm not joking, in a three tick range on a 10 year. Right, okay. Nice one, dude. Nice one. Well, if I'm honest, ES has cleaner moves per se, but it's a completely different beast, to be honest with you. If I was to be trading an indices now, it would probably be Euro stocks. If I was to trade one, just because it being much thicker. Um, I was still expecting Treasury some of this delta to unwind. So say you've got 28k negative delta, so you'll pretty much see that a lot of this will probably carry over for the session. Dynamite, how's it going, dude? And just so you guys are aware here, we've pretty much got the whole curve here. So we have bottom right is a 2 year, top right is the 5 year, middle is the 30 year. This one here below the 30 year is the ultra bond. To the left of that is the ultra 10 year, and this is the 10 year. I mainly execute in the 10 year. because I feel that you can be wrong more, to be honest with you. And what I mean by that is if you get filled in a good queue position, and say, you get swept in that scenario, very typically you can still scratch or at most get out for like one tick. Whereas I can't tell you the amount of times, I've dabbled in the Ultra Bond and I just can't get filled. It just, there's nothing worse. Because in treasuries, you'll notice this, it's not really the market that you can just put in a hard stop. And what I mean by that is, say for example, how do I explain this? Say you're long here, 16 and a halves, and there's 5,800 on the bid, right? The market pulls back, say 3 ticks down to 15 and a halves, and there's 11.4 on the bid, right? Basically, if you're buying, you need to sell to get out of that, right? To get out of that position. And very typically, there is going to be tons on the bid for you to get out, right? Whereas if you've got a hard stop in, a stop is literally, execute market order once touched. So the last thing you want, is, the market to tick down. I mean, this will literally happen. It'll tick down one tick. That'll take you out of the trade, and then the offer will be lifted. You know what I mean? It's the last thing you want. Hey, Maku, do you mean for the footprint? Or do you mean what my volume profile is on a DOM? No time to trade today. Nice. I don't know if you've missed anything, to be honest with you, dude. I put in pretty much a full session today and ended up, I think it was plus 3 or 4 ticks or something. Paid too much in commissions, so ended the day relatively, nothing to write home about. Any of the charts. Okay. So for treasuries, I use a 15-minute time frame. I find 15 minutes is kind of the sweet spot. Basically, every two candles makes up a 30-minute period in market profile. If it's an extremely, extremely slow day, I'll maybe increase that to 30 minutes. I find that any less than that, time frame wise, it doesn't move enough. Now, I have in the past used things like tick charts. Sorry, not tick charts, just range charts for treasuries. But typically, it's easier for me to just see what time it is, to be honest with you. And very typically, my footprint charts, I'm mainly looking at cumulative delta for the session, delta for the last 15 to 30 minutes, the total volume that's happening in each candle. So let me get the pen out and I'll just circle this and explain it so you can actually see what I'm looking at, because I'm aware there's loads of numbers on the screen and you're like, how do you digest all of this? So let's explain it a little bit, right? So this number here is the total volume for the candle. This number here is the delta for the candle. And then we have the activity that's happening in the 15-minute time frame that you can see. The right is buying, left is selling. And what I'm typically watching, volume is extremely important. When we got down to this level here, right, down here, you can see on M periods, not enough volume, to be honest. In order to crack this level, they probably needed to see like 30, 40k volume at least, to crack this level. It's just not enough. And I'll show you what I mean by this. You're going to be expecting when the moves happen, if we go back to the first couple hours of the open here, You're seeing 51k, 62, 52, 35, 42. A whole heck of volume comes in, and you need volume to move the market. So that's what I use for the footprint. And then I'm watching the positive delta flows to see what's happening if it's extremely one-sided, which you can see it is at the moment. 470 4,782 positive delta and only 8 negatives gives us the difference. And then we've just got it as a percentage and then the volume bar difference to see how it compares. So that's the footprint. And very typically the footprint just gives me a gauge into the actual delta flows that's coming into the market, um, what the volume is like, and if there's any imbalances that are happening. That's pretty much it. And then I have the red lines. I've just changed that recently, where before they were like extended here, just to the side. But these are just the volume, average price, standard deviation bands, just to let me know how far away we are. As Treasuries tends to respect these levels quite a lot before you get an absorption and back ticking a lot of the time. And then volume profile for the market profile chart that you're seeing is just simply the regular trading hours session. And then for the DOM that is up, and I have this for them all, it will print a new volume profile once the start of the bond open happens. So I still keep the overnight high and overnight lows, which you can see here. So this is the overnight low. But it'll give me a new session profile at the start of bond open. Because I still think overnight high and overnight lows are important, of course. And that's pretty much it, to be honest. It may look extremely complicated, but how you're looking at these DOMs, just so we're all on the same page here. So I'm mainly watching the 10-year. It's the main one that I'm executing on, right? And treasuries are extremely correlated. Ideally, when you get the super easy trades, you're going to have the whole curve is basically going bids at the highs, or if it's selling off, the whole curve is basically probing the lows. And if you are basically scalping for one or two ticks, you want to see the 5-year is a good one to be watching, and you also want to be watching the 30-year. I like to see how it flows into the 2-year as well, and then of course we have the ultra and the ultra tens. But for example, I want to see, if I'm looking to scalp for a couple of ticks, I want to see the 5-year lift the offer, the full 1900, reload the bid, and then it to happen in the market that I'm looking to execute on. It's very similar how we look at, when you're looking at ES and then you're looking at NQ, very typically ES and NQ are correlated. So ES is not going to break the highs while NQ is at the lows, right? And treasuries are literally 100% correlated with each other, extremely correlated. And then, of course, when you factor in the curve as well. So we've got the full spectrum here. So sometimes you're going to see spread trading that happens. Sometimes you'll maybe see them selling. You maybe see them selling the tens and buying bonds. It just really depends. That's part of the day flows. But the easiest ones is when they're moving in correlation. Yeah, exactly. Exactly. I completely agree with that, McCoo. No, so the overnight high and overnight low is pretty much from the close up until the open of the new session. So what trading occurs before then? And a lot of the time in bonds and notes, you're not going to see a move till about it's about 2 hours before open max. So you're talking about 6 a.m. to be honest. And that's me being generous to be honest with you. Normally an hour before open, you'll maybe start to see some flows come in. But the other times you're kind of just scalping around if you are playing the overnight session. Jengi, how's it going? Right, do you guys want to jump into indices? Because I feel like it's a bit of watching paint dry for you, you know. How did you do today, Maku, on 30 year? How did you get on? What do you prefer, Maku, JJ, or Yoda? What do you prefer? Yeah, I think we'll jump into indices. It's a bit like watching paint dry for everyone. I like that, mate. I like that. Okay, let's have a quick looky. Relatively balanced. Have we done any sweeperooskies on good old ES today? So very quickly, you'd mark out overnight high, mark out overnight low. Did we get any sweeperoos just before open? We swept little teeny weeny bits, then went straight bids. Glory sweep of overnight high back into value. It's always the days that I don't even look at ES that this happens. I mean, textbook stuff, right? That's why we draw out these levels. Start of every session, you should have these marked out. Your bias. I'm hoping. So when you guys come into this session, right? Despite this going bid, massively, would you guys be expecting today to be a balanced session prior to FOMC minutes and things? No data on the calendar. Would you not all be? Would that not be your like anticipated day type? You missed it. Is that for the long you're talking about? Right, we'll go with Yoda. I like Yoda. Seeing if you've got the consistent profile. Yeah, base case. Yeah. So that would typically be the way. And as we've always said, if we look at this here, I mean, we can't really bring up the order flow because, I mean, actually, it was the highest session, to be honest with you. It'd be interesting to have a look at the flow of what that was like. But as you can see, it's basically parabolic into the level. We'd probably see some stop runs happen, then they just hit it straight back. They're the probably the best trades. Those ones. Yeah, I'm with you. I tried multiple attempts at the long, mate. To be honest with you. If I had a crystal ball, I would have just, held it. uh, but sometimes the flows are not easy, mate. That's just how trading goes. And very typically, despite my analysis and bias being correct, I trade what I see. You know, I think this is going to be. I've already got the overnight high and overnight low marked out. Why is there no overnight low here? Why is that not marked out? Is that it there? Yeah, it is there. Okay. Um, I'm going to draw out the sweep levels if we do get down here. So we've got here and then a sweep here. Basically no diddling until the market comes to the sweeperooski. If we do get there, pretty much the plan. Right now we're at VWAP. We spent the last 40 minutes here in a 20 tick range, to be honest. Let's clean the delta up, clean the prints, rid of these lines. Okay, we're at POC and everything. I mean, I've not really got any real idea, mate, which way we're going to go, actually. Wow. Wait, the delta's negative 32k. Holy potatoes. Okay. Now this is good. Okay. Wait, what? How? Let me have a look at delta in this chart. So what were we in overnight session? Okay, overnight. Look at the amount of selling. Wow. And look at this move here as well. Okay. That's extremely one-sided. And then basically to get here, the offer has just been pulled. With basically like what 10k delta or something to get all the way up here, and it's taken us 30,000 delta to get down here. It's wild. Hmm. Very interesting. Very interesting. Okay, if this continues to get even more one-sided when it becomes market on close data comes out, I would like to see some of this basically work its way back up the ways, to be honest with you, because that's wild. Yeah, tons of absorption on the bid, tons. So all of this negative selling that's coming into the market, I mean, jeez, oh man, it's 32,000 contracts. You don't see. I mean, yesterday when we were at same time frame, guys, it was like what? It was flat. It was like plus 6k. Nothing really to be happening here. So I suppose there is the chance here with this sell-off that there's been some long liquidations thrown in the mix here, but just too much selling to come in. I mean, 2,665 contracts, the market hardly moves coming in and hitting the bid. So the bid is still extremely strong, despite us being. I mean, where did we open? Where was previous day close? We're literally at previous day close, and we've exerted 32,000 negative contracts in the session. So going by that, if market on close data comes out, we could very easily get up here, to be honest. I mean, I would like to see, with for that theory, I would like to see this protected. You know, this sort of area here. My drawings are terrible. Let me draw an arrow. Will that work better? Is it more of a straight line? Yes, that works. Okay, so we want to see this high volume node in this area protected by buyers. Fluff around a little bit more, and if buyers do start to press on the wrong thing, oh, I really need to look into the hotkeys for this pen thing. So this is the first point, pretty much. For the buy side here, we want to see this being protected. And then we want to see some of this selling unwind because I can't remember the last time I've seen so much negative delta. The session never really ends negative 33k delta or even more than that. I can't remember the last time I've seen a session that's more than 33 finishing, to be honest. You get properly whipsawed trying to trade back by, yeah. Yeah, I'd imagine, see this here actually it's just so out of whack that it's hard to see. But the scaling is wrecked, right? So you can see here, look at the amount of selling. So let's actually put that into context for you. Okay, so from here, right, you can see this level all the way down to here. The market, geez, 6,000 delta to here. 20, whoa, more than 30,000 contracts from here to here. Aggressive selling, and the market is just absolutely chewed all of that up. There's another example, another 250 contracts hit into the bid. Market's just instantly gobbled and went bid. I mean, if we take out anyone that is still holding a net short that is struggling right now, this is the first reprieve they've got here. They're probably gonna be covering here. Anyone that's entered short in the last 40 minutes, they're covering here. And then it gives them an initial pop, and then it's not too far away till we sweep the highs. So it does look quite juicy. You could probably whipsaw trying to trade that, yeah. Yeah, exactly, Simon. I mean, the bid is. I mean, we saw that yesterday, right? The it's just completely one-sided bids yesterday. Let's make this a little bit smaller. Make it blue for buying. So yeah, it was this level here. Nothing worse with those days that you're anticipating the market to dump and it just doesn't do anything. I can I can probably say that the everyone that was trading yesterday that was shorting this looking for a break, you know, would have probably got stopped. Keep on. Pressing the wrong button here. What time was that at today? Oh yeah, so it's lunchtime. Yeah. So this is all at lunchtime here, US time. So you guys in any positions at the moment? The sellers definitely need to be careful because I mean, how much more? Seriously, how much more have they got? You know, if the market's not going down on negative 33,000 contracts, I don't know what is. I can't remember the last time, you know, I've seen a market end like negative 40, negative 50k in a session. It just doesn't really happen, to be honest. Oh, sorry, you're right. Let me see here. Of course, of course. Yeah, this is open. I'm 5 hours ahead. This is an hour after open. 2 hours. Yeah. So you're right. Two hours. 2 hours after open is all the chopperoo. Typically, as well, when you have quite a lackluster opening session, normally the PM session likes to make some moves. Delta's that wild that the chart is skewed. We're approaching the lows of session today for Delta. We've got the Dows at POC, so is NQ. So let's hear, what positions did you guys take today? Around about here, did everyone try and short the lows, hoping it would crack? You took the opening range breakout today on NQ and stayed away from PCOL after that. Nice. How did you do on that trade? Were you long or short? Oh, pardon me. Yawning. I take it, did you go long in the open range break? Nice. Nicely done, dude. It's pretty much straight up. What do you use? Do you use the 30-second opening range for CME, or do you use the 5 minute, or what do you use? It'll be an extremely interesting close here, to be honest. Um, can sellers continue to throw more in here? You've got to think to yourself, what kind of market participants are the ones that are going to be gobbling that up? Very typically, your large speculative firms are probably not going to be one of carrying the risk into FOMC, probably have some weighted, but it's more likely going to be your pension funds, hedge funds, or that are much more longer term looking. Tried to go long to the top, exited early, it didn't show any excitement for the new high. Yeah. Yeah, exactly. I mean, it's like everything. Everything's easy in hindsight, of course, but it's best to sort of have a rough idea on the day type. I think with ES, to be honest. There was Canadian CPI today actually. Their bond rallied, so it helped US Treasuries up a little. Oh, so you used the 1 minute pre-S and NQ. Nice. Very nice. Patachi, hello. How's it going, dude? Nice of you to stop by. We've officially now broke the lows of session on Delta. 34,000 Delta. Market not moving. I'm going to continue to say that because it's so absurd. Do you know what is crazy about this profession? It doesn't matter how long you've been doing this, right? Like there's variations on the theme, but it just still amazes me um just how different day types are continuously. There's really nothing is the same. Again, there's context and variations on the theme, but I'd love to see if we can finish this day at like negative 50k or something. You certainly don't see that, especially with how thin ES is as well, you know? So I didn't actually look at ES today, but my view overall today was okay, Monday, Tuesday, literally zero data on the calendar for the US. We've also got FOMC tomorrow, minutes, and we've got some data coming in on Thursday. And very typically before FOMC events, there's lack of volume, lack of direction. So my expectations across the board today was just balance, just money money down to the lows, back into the mean, distribute a little, sweep some highs back into the middle. That's why I was expecting in treasuries that we ran over earlier that when we took the highs, it just didn't go. There was no stops, sadly. And just the way the world, I'm not holding a treasury trade for 3 and 4 hours. I'm just not, to be honest. Do I use RTH profile for ES? Yes, this is the regular trading hours profile. The one that I've got on the DOM is the full day session. Yeah, exactly, James. Completely fascinating. Doesn't matter how long you've been doing it. We're continuing down here in terms of delta. Yeah, exactly. Just different variations. What would be super interesting would be to check the open interest cards tomorrow to see how much of this is opened or closed as well. I think we're in for a fun couple of weeks, to be honest with you, especially with Treasuries having the highest open interest ever at the moment. It's millions and millions of contracts, so it's going to be a fun roll. Patachi, I think you need to be separating the RTH some which way, whether you're doing it with volume profile on your, standard charting, or you're doing it on your DOM, whatever's easiest. To be perfectly honest with you, I pay absolutely zero attention to like what the point of control is or whatever on the Globex session or overnight. It's really meaningless to me. Um, I only pay attention to the overnight high and overnight lows, as they are just fantastic areas to be swept on a balanced day. Now this is the thing here. The way this market's went today, traditional charting wise, this is a short for everyone right now. We've pulled back now, and this is like a traditional short for loads and loads of people. Back to VWAP, failed break, continue on. You would think. Yeah, it'll be interesting to see what we can do there, James. In terms of the downside here, I mean, I'm trying to think of any form of plays you can have to the downside. First things first, you need to break POC first. And considering how much selling has been thrown into the market right now and it's not really doing anything, I mean, is it even possible to get down to low session? You're going to basically need the same amount of aggressive selling and just a bid to cancel entirely, which seems rather unlikely considering the theme, because buyers are entirely in control on the limit at the moment. Ah, okay. Create. I suppose as a level to actually get touched or revisit is a good way to look at it, but certainly not to execute any trades on. Patachi, hello. Yeah, that's a good idea. I'll maybe try and look into some stats on that on treasuries, to be honest. Um, as a level that's revisited as such, could be a good one to look at. Certainly a good idea, to be honest with you, for your first target for if you're fading this, right? You know, funnily enough, when you're saying that, look at the size it came into selling right at the point of control. Look at you go create right here. Gary, hello. What's good? We are just watching the amount of aggressive selling that's come into the market, but having no effect. It very much is resembling, sellers are throwing, it's like trying to shoot Godzilla right now. It's very much what it's like. It's like they're throwing everything at the bid, and the bid is like, you've not seen my final form? Yes, Gary, too many. Too many today. Ended the day positive in ticks wise, but just too many scratcheroos, to be honest. So did away with a lot of the did away with a lot of the Profeto. I'm really intrigued here. If I mean, can we get to like 50k negative delta? I really want to see it. I can't tell you the last time I've seen that. We'll try. I mean, look, they're aggressively hitting in again. So we need to break POC here. And you can just see, look at the amount of just even on the since we started, just aggressive selling that's coming in. So, oh, he did. Nice. Yeah, quite an interesting day. We covered treasuries at the start of the stream. Um, had the opportunity of being a really, really simple day that just didn't happen. And what I mean by that is we broke the high of Friday and Monday's RTH, and it just didn't go. And what I mean by that is like, 20,000 contracts trading at each price, you know? Yeah, I like balance days as well. Jeez, oh. Nothing to see here, just a casual 35,000 negative delta on the session. See when buyers actually start stepping in and pressing into the offer here, I can feel pain. I can feel a lot of short coverings here. A lot. Oh, well done, Gary boy. Nice. What were you trading the tens? I mean, or did you that three tick range that you were talking about? Was that a couple hours? Was that like May 1, 2 p.m. US time? I was bored at my marbles when that was going on. I actually took a couple of trades after that. Just one of those days I should have just went. I just shouldn't have bothered. To be honest, it's not. It's not even that. It's not like I didn't lose or anything. Or had a down day. It's just a waste of time. But you have those days. Just all you're doing is extremely. That's the thing about treasuries. You can, you can get extremely good at controlling risk. Extremely. I mean, within a couple of ticks. The only market you can do that. You can't blink and you're offset a couple of ticks in ES these days. Completely different. I miss it when it was it was like 400 or 500 bids, pre-COVID, and then even before that, your X levels now like 1,500 bid an offer. I was on a 30-year, right, right, right. I've got no idea what PST is. Is that like Pacific Standard Time? I've got no idea what that means in terms of me without bringing up a clock. Do you see the theme here? Look at the amount of money that's having to be spent to get the market down here. Then the buyers are like a tiny little bit of buying, and we go up like 6 or 7 ticks. So just the offer is weak. So the offer is aggressively heading into the bid absorbing, buyers are pressing in, and the offer is not there. Pretty much is what the theme looks to be. And once we get, some buyers actually starting to step in here, there is going to be an absolute uncanny wave of shorts that need to start getting out of their positions. They're probably going to have to start getting out of their positions by close of play anyway, just because they're not going to want to carry this. So we'll see. Because in order for the market to get all the way down here, the bid's basically going to just need to pull every single bid here, or we're going to end up at like negative 50k, and that just seems extremely unlikely. PST's California, nice. Okay. Yeah, it's certainly easier, mate, isn't it? It's not as stressful as well. Oh, it's 8 hours behind UK. Okay. So New York is 5 and Pacific is 8. Okay. Well, and what do you think about the ICT students making withdrawals in the platform industry? Yeah, I mean, I don't. This is the thing, right? A trader can take in this day and age pretty much any strategy, but the problem is no one actually learns context, right? That's the trouble. Pretty much any one of the ICT, we'll call it strategies or playbooks, right, requires the trader to have an actual deep understanding of the market. And very typically, when you go into any sort of public forum, right, and anyone chats about ICT, the number one thing they say to each other is, there's the fair value gap in the 15 minute without any other form of context, you know? And sadly, people, context comes with intuition and experience and just time in front of the screens. Um, but if you're only focused on one specific strategy or whatever, without learning, having a deeper understanding, you almost get the sort of the markets, out to get you. Now, and to be honest with you, traders that are profitable, it's not really got anything to do with the strategy. To be perfectly honest with you, it's actually to do with the trader. They're maybe better at managing risk. They're maybe better at managing the position, scaling up at the right time, adding in, keeping out of bad positions. You know, they maybe have a better trade window. There's so many different factors. It's actually very little to do with the actual strategy, to be perfectly honest with you. Um, the reason why I challenge this is because ICT is one of the largest followings, right? Uh, and this is the thing. I'm sure he's going to have helped a lot of people, and that's fantastic. But sadly, people just blindly follow a strategy. That's just the way people are. You know, they want it to be, A happens, then B correlates, then, C occurs, and then they buy. You know, so I think it's more to do with the trader and the experience that you have rather than the specific strategy. And you need whatever you do, you need to trade a strategy and a market that suits your personality. And to be honest with you, the most common setup that happens is someone watches ICT then trades NQ. You know, when NQ is one of the hardest markets to trade. You know, so there's loads of things. Loads of things, man. Loads of things. Well, I think very typically, I'm going to be completely honest with you here. Um, I think with the ICT side of things, right? There's so many acronyms there, and it almost is at the stage now when you look at it, from the outside, that there's so many acronyms. Each mentorship has new acronyms and new things to learn. The market's not changed in the last 10 years in terms of, sweeps, mean reversions, and breakouts. It's still the same. It's the regimes and the book type and Fed cycles that change. And the trouble is, because there's that many different strategies within it, um, you know, typically of a day, there's always going to be one that works, and then you're kind of then onto the, well, oh, you just didn't use the right one today. You need to go back and learn more. It's like a never-ending cycle, to be honest. When that's just my opinion on it. If you can make it work, happy days. Look at this delta. Can hell, it's just not stopping. But yeah, that's the that's the main setup. And plus, 72% of fair value gaps fail. That's another number as well. Um, Now, of course, people are going to say, well, you don't take every fair value gap. Right. But which ones do you take? How do people know that? Does it need to have a break of structure, change of character? Do you do it on balance days or breakout days? No one really knows, to be honest. That's the thing. Sometimes it'll work for a couple of weeks, then sometimes it won't. But this is the trouble with trading: is realistically, majority of people don't have an edge, and they just go through a string of winning trades, without actually realizing, you know. So completely agree, Craig. Completely agree, mate. It's the most important thing, but it's the hardest thing to learn. Because very typically, when people start trading, they they want something super mechanical. When the moving average crosses and the RSI is oversold, and the MACD crosses, whatever, then I buy. You know, I mean, come on, it's 2024. You know, if that was an edge, algorithms, and some of the top quants in the world would be nuking that. That would be gone in an instant. Do you know what I mean? So, it requires a lot to understand the flows that are coming in the market, what kind of day types you're in, what is the theme of the session, what's the sentiment of the session. Because very typically, if there's a theme and sentiment on the session, that will likely continue, to be honest. And very typically, I try and establish what the theme and sentiment is for that session, and go with it with the path of least resistance until it changes. And very typically, it will change when there's data coming out, or it will change, the start of the next session. Just because it was going up yesterday doesn't necessarily mean it's going to go up tomorrow, especially when there's data coming out as well. Gold is very, very hard to trade. Very, very hard. Honestly, the thinner the market, the harder it is to trade. You need to have wider stops. You're not really scalping then. You're more taking a bigger chunk out of the market in day trading. So you probably need to size down to give yourself more breathing room. Completely different style. Like I can't stress enough, from trading something like the 10-year note to trading gold, oil, and NQ, it's literally like chalk and cheese. It's not even remotely the same thing. Yeah, exactly, James. And very typically, people get stuck in this sort of strategy hopping cycle. And another thing is they don't journal. You know, um, journaling is probably one of the most important things that you can do in your trading. At least export your trades, import them, write down how you performed in the session, and write down your behaviors, and take a note of the data that comes out, for example. At least do that. You don't need to, go into extreme depth because it's hard when you're taking, 10 trades a day. But you do that over time and you actually start to build confidence in your own data. It makes a massive difference because then when you've got a decent enough sample size, you can actually run some stats on your data that tells you what you're currently doing right now has a profit factor of X, which is profitable, and there's then a 95% confidence interval that what you're doing is no longer luck. And when you have that data, it doesn't really matter what John, Paul, or Kyle says to you because your data is yours. Doesn't matter if it, you know, doesn't really matter. Do you know what I'm saying? And if you don't know that data on your own numbers and your own trading, you're going to suffer from recency bias. If you have three losing trades, you're not going to remember the last time you took three losing trades. You know, whereas you'll know that with your own data. Typically, if you lose three trades in a row, you don't go on to lose a fourth. You would know that in your data set. So I know I harp on about that, guys, but it's one of the most important things. And whether you like it or not, there is never going to be a trader that has been in this game for a long time that does not journal. It's just never going to happen. Another thing that you need to understand as well is the competition that you're up against, whether that be, people in this room, me, other traders, big traders, institutions. You better believe they're journaling and working in their edge constantly. So why shouldn't you give yourself the best fighting chance to survive and have longevity in here? Which type of candle do I prefer for analysis, like range, Heikinashi for better view, and cancel the noise? So for ES for the stream, I like Heikinashi, but I trade treasuries. I don't really look at candlesticks. So maybe I have the 5, 10, and 30 year up that I just like to check what happened in the overnight while I'm drinking a coffee. But like actually in the session, I don't look at candlesticks. Musty, I'm good, dude. I am good. exactly, Juan. That's the thing, dude. Um, that's the thing. And I suppose this is the trouble is rather than keeping it really simple, and saying, you know, turtle soup is just a sweep of an area and a revert back into value, or a mean reversion trade, a counter trend trade. There's all these weird acronyms in there that makes it extremely complicated for no real reason. And the other thing, the other slight issue I've got with it in general is when you spend like a year to 2 years doing that, right? You then look at a chart, you then can't unsee it. And I can tell you from doing this for years, the traders that I speak to a lot of the time, you need to then completely change your perspective and leave your beliefs of the market, basically behind you when you then go into something different. Because you then look at a chart and you're trained to look at the market in that perspective. It's very hard to unlearn learned behaviors, you know. But if you can make it work, then happy days. It doesn't really matter. The only thing that I would say, Juan, is and let me know if I'm butchering your name or not, by the way. Um, if you're to actually know, say for example, I mean, I don't know the exact terminology, right? But say there's a sweep of the high, which is like a turtle soup, where the market goes for, I don't know, some sort of sell side inefficiency. And in my land, basically large traders are getting out of their positions on the offer, right? At a high. Then typically you would then see the bid be pulled, some absorption would happen in the offer, and then it would revert back into the mean. Very, very classic trade that happened on the overnight, happened at the start of open, right? Now, the reason with order flow is you actually get to confirm that before you get into the trade. Whereas when you're just looking at a candlestick, you don't really get the confirmation first, to be honest. You maybe get a wick. And how many times does the market go up to level wick and then just continue on? Do you know what I mean? So that's one of the reasons. I just think it could be used in conjunction. To be perfectly honest with you, if some sort of order flow was to be used in conjunction with it, it would probably be a dynamite strategy because the concepts are, you know, kind of trying to help you to understand that, basically large traders are getting out at the other side of trades, which is a sweep. The market goes to levels where stops are going to be triggered. That is all very much true. Just the way of it pitched being that it's one algorithm that runs the market is, it's nonsense. Um, but a lot of you know, uh, the sort of main theories around it are. I've got absolutely no idea what gold back is. Exactly. Axe handle. The regular trading hours essentially gives you the most volume and the most direction. Yeah, nice absorption and sell off here. We'll see if we can. I'm still not convinced here. There's just so much selling coming in terms of negative delta. It's never this negative. So I think they're going to unwind towards the end of the session. Yesterday we were flat, so the market could have went anyway. Philip, if you guys using DOM, ICT, fair value gap, order block. Sorry, what's the question, dude? I mean, realistically, we're all just looking to win here at the end of the day, but you know, the thing is that's the most weird about trading. It doesn't happen in any other profession. Is the same thing is called. It's got literally 10 different names in trading depending on where it's learned from, which is nuts. I'd love to see his end in like a negative 50k delta. I can't. I don't think that's happened this year. To be honest, I don't think there's been a negative 50k delta this year without it unwinding. JK, now you're talking, dude. Now you're talking. So I've been saying this now basically since the stream started. Very typically, anytime we've seen this buying, notice any form of buying that's coming in, right? The market is in essence, uh, the offer is just stepping out the way. So we have, oh gosh, 10, 20 minutes till the market on data comes out. And I think what we'll find is a lot of business needs to be done, i.e., for these shorts need to be closed. So we'll probably see a bid up, to be honest. And I would be very, very surprised if we finish the day like negative 50k delta, to be honest. So I suppose realistically here, you want to see, you know, in essence, for buyers, you do not want to see, essentially 14s broken here, to be honest with you. This is the most one-sided absorption I've seen in a long time. Just saying the only way I think that we're gonna go towards like eights or fours here is if this bid just disappears. Like so all the selling that's happening, do they have more in the chamber? Because this is just absolutely bonkers, the amount of negative selling on the session here. And then so they need to throw more at it, and also the bid needs to stop absorbing because clearly you can see here, you know, this is essentially what's happened to do that. There's really been not very much buying come in at all. It's just exactly the opposite. So we'll see what happens in the next 7 minutes. There'll be an initial inburst of what will happen. No, not so. Axe handle, not for negative 36k. We're literally at the previous day close. What, 20, 30 ticks away from it. Yeah, the day is negative 36,000 delta. So the market should be way, way, way down on that. So in essence, the bid is just absorbing all of the selling that's coming in that you're seeing. Like we're low of session on Delta, way, way, way below low of session on Delta, and the market's not anywhere near the lows. So in essence means that the bid has been absorbing all the selling, which you can see right now. They're hitting 300 contracts into that one price, which has been absorbed as 500. And they've been doing that just gradually across the whole day. Um, so I'm hoping we can continue on selling because the market's due a pullback, but you just don't see many days that end in a negative 50k or whatever. Normally towards the end of a session, delta unwinds. People need to do business, need to close positions. That's typically the way it is. Because we're just now approaching negative 40,000 on the session. I mean, here's the thing: if the bid just disappears here, right, and stops absorbing, and the selling continues, then of course we can go to the lows. But to be honest, I think that would have happened already. So we'll see. Nice. Well, that's the main thing, Axe, buddy boy. That's the main thing, dude. Do I have any book recommendations? Not particularly, no. There's a playlist in the description of this video, dude, that's got hours and hours of stuff there for you to watch. It's probably the type of market you want to watch and do rather than read, to be honest. We run through how to read the DOM, what you're looking for, everything along those lines. And take your time. I mean, this is you know, from looking at a candlestick chart to looking at depth of market, it's a completely different beast. Alex, no, it's the whole session. It's the whole session, dude. Yeah, we'll see if these guys start to unwind. Interesting to hear what the market on close data is that comes out. We've got 3 minutes for the volume to start coming in. And let's clear this before. Let's clear the delta. I mean, it's kind of easy to see the amount of selling that's happening. We've seen thousands of contracts set into the bid here. Market not move. So we'll recenter and then let's see if we're going to see the sellers in essence are going to start unwinding here and basically becoming buyers. Buyers start pressing in and we go back towards value area high. I think you said that earlier, James. Or I don't know, sellers continually be aggressive, which seems the most improbable setup at the minute. So let's clear delta and see. So now you can see exactly what's happening. Gonna make this slightly bigger so you guys can see. So note any buying that's coming in. Basically, sellers are struggling, considering the amount of selling that was happening to just take the market down. So in essence, what we're seeing is the offer being weak. If buyers really do start, I mean, if we get 20k, I mean, if we get like 15,000 positive delta come in here, which is basically net result of market orders, this thing is going to at least get us back to VWAP and beyond, to be honest. So we'll see in the next couple of minutes what's going to happen. Sellers need to break POC and the bid needs to dissipate for sellers to continue to take control, but we'll see how that works. We'll see if there's a huge unwind. We will see. So this is going to be an interesting close. So we've got 15 minutes. Well, probably not 15 exactly, we'll call it 13 minutes of volume coming in to see what the market's going to do. Be very surprised if more aggressive selling comes in. I think a lot of these positions have to be closed, which will probably take us back up to value area high, but we'll see how it shapes up. Watch the buying here. It starts to come in. 10 seconds for the flow. Notice the offer being pulled here. So let's see if we can crack this. And it can continue on. There we go. Oh, wow. There it is. Wow. There's the instant unwind. Let's see if they're going to continue it up. That was madness right there. That was crazy. And then they've instantly hit it back as well. This is going to be an interesting 15 minutes. Notice the bid pulled there, so they come in with some real aggressive size. And then on the way back down here, they've just pulled the bid. Aggressively pulling. So let's see if they start absorbing down here. That was madness. So still these positions not unwinding. So we'll see. This could be quite a whippy close. Let's clear this because bids and offers are being pulled a lot at the minute. That pullback down that we saw, just the bid was pulled both ways. You may be thinking, how am I knowing that? Just the contracts that are trading to move is not a lot. You can see there's two-way here. Again, the side here is basically buying. There's still negative 37,000 here on the sesh. Let's see if they can continue on, or if they get unwind here. The bid has been pulled. You can see that, of course, by the tape at the left, but the amount of contracts that are hitting in. That was an aggressive push right to value area high there, wasn't it? It's going to be interesting what for 8 minutes, 8 minutes till the true volume starts to come in. We may just finish here, by the way, but I think we're going to need to probably close. I'm anticipating something like 15, 20k delta to come in here, to sort of write this position out. But we'll see. I mean, if the bid continues to get pulled here, this could be curtains. So you're just still pulling the bid. Again, delta low session. Wow. One side has got to puke here. Got to. And I want to see if we can end negative. I mean, negative 50k. That would be bananas. But bear in mind, in the next 7 minutes, when this true volume actually comes in, see if they do crack this with some size. If they continue, this is going to crack. 600 absorbed. You see tons of liquidity being added on the offer. There's a juicy one up here. 1,000 contracts absorbed on the bid right at POC here. This is look at this delta. Jeez, oh. This is the most one-sided delta I've seen this year. For the market not really doing too much. A complete unwind. If this does go, this should capitulate below here. If it does, so watch for a crack on price. I mean, we've got 5 more minutes remaining. Will they basically ram it back up to value area high? 1,400 contracts here absorbed at 20s. Buyers are still not, they're just simply absorbing, not really putting any pressure into the offer. Once they do, we're going to see the same movement that happens. Let's clear this. Right, if this is going to go, there we've seen more contracts absorbed at POC. This should be going. If this doesn't go bid here, I am going to be amazed if this absolutely dumps the lows with all this selling coming in 4 minutes below the close and 44k negative delta. Going to be amazed. Three minutes remaining. $2,000 contracts absorbed into the bid at 20s. Very standard. Just a casual 2,000. This is one of the biggest one-way trains of selling. Either this is just a massive, massive unwind of selling positions in light of basically taking profits for the data flows that are coming in the next couple of days. Two minutes remaining. This would be the time if we can see what the market on close data is going to be. Be interesting to see if you guys can put it in the chat as to what the data is. Yeah, exactly. Exactly. And more to the point, who's absorbing it? That's the thing. Poor market making firms having to absorb that. Because with this amount of selling, this should be. I mean, we should just be capitulating right now, but we're not. Right, let's try and for the next minute to come in and see if we can. Oh, okay. This is much more interesting than yesterday's close. Okay, here we go. Let's see how much they can take in. Are they going to continue, or are we going to see an aggressive amount of buying going to come in here? Let's see. Let's see how much can unwind. They're going to hit it. Nothing. We've got 3 minutes for any magic to happen. This is crazy. It's one of the biggest outliers I've seen here. We're just going to we may still go bid, but most likely we're just going to end here at POC. So all of that selling has been absorbed here. Thousands and thousands of contracts. And they're not even really pressing into the bid here. So it'll be really interesting to check the open interest tomorrow to see how much carries over. I wouldn't say there was a huge amount there, but definitely volume, but nothing crazy to be honest. It's normally a lot more wild than that. Some market on close you're getting huge moves, especially with this amount of one-sidedness. It's always a little bit sus that basically they're clearing off the books prior to the data coming in. They're not taking on the risk. See, it's never the actual selling that I think about that comes in. It's the absorption. Do you know what I mean? It's not the selling because that's people coming in and just dumping off positions, right? It's the fact that someone is now has that side long on the passive side, right? On the bid. So very very simply, you've just seen two transactions happen. Aggressive selling, someone unwinding positions, and the bid absorbing it. Exactly. Exactly. And that's well, it's always in my mind. It's not the selling, it's the fact now that because the selling that's happened, you've got two ways, and this is where you need to sort of build out the puzzle. And Delta gives you the part of the puzzle. So you need to think to yourself, is that fresh or new business that is happening? And very typically, the selling that's came in prior to large data flows coming in for the next two trading days is most likely going to be profit taking and old business. So you have firms, institutions, that have essentially just absorbed all of that. By all of that selling has been absorbed. Because when have you ever seen a day that is negative 44,000, to the sell side contracts, right? And it not be a down day? I mean, I suppose there still could be some juice in here. Is there any data still to come out? Was there not data like quite late on in the session? I don't think it was anything meaningful. Um, if we were going to grind up higher now, we would have already done it. We would have done it aggressively and probably took the level. Um, when we saw this initial spike, this is more the behavior I was expecting to happen. Very interesting. I'd advise you guys to check the open interest sheets tomorrow and see if open interest has been added, right? Then in essence it will be these limit orders that have essentially just absorbed going into that meeting. But extreme red herring day, to be honest. I don't actually think we've had a stream yet where we've seen this amount of negative delta here in one session. And that's it, that's all she wrote. We're not going to clear this off now. But you can see how the offer though is still pretty weak. Look at the amount of little teeny weeny buying that come in, and the market's essentially moved up the guts of 10 ticks. Yet it's taken all of that selling to get to here, you know. So open interest, JK, tells you basically tells you the contracts that were carried over. When you marry that with the COT report, it tells you the positions that are net long and net shorts. So it gives you an idea, and you use your knowledge with it on the flows that happened that session. Is if those positions were net long and net short. So you basically then realize that from say this price, there was the guts to say 30,000 contracts absorbed, say in this price. So just as an example, from the open interest, you may have an idea that you have some firm or firms that are net long from this position, as an example.